All right, listen up. The suits on Wall Street, the talking heads on TV, they're feeding you a nice, clean story. But if you actually look at the code, it's bugging out all over the place. We're here to unplug from their narrative, to decode the market's hidden signals, the glitches, the anomalies, the stuff they don't want you to see buried deep in the data.
First things first, the legal guardrail. None of this is financial advice, okay? Think of this as a strategy session in the back room of the casino. We're counting the cards, we're spotting the tells, but at the end of the day, you're the one placing the bets. We're just pointing out where the house might be bluffing. So, always do your own research.
And this quote, this really gets to the core of the simulation they've built for us. You get the Federal Reserve, the Bureau of Labor Statistics, all the guys in D.C., their authority is what creates the official numbers, the law of the market. Our job is to hunt for the truth.
Okay, so let's look at the first major glitch. The official story is that inflation is cooling off. It's down to a comfy 3%. Sounds great, doesn't it? But the APE reality, what the data on the ground is screaming, tells a totally different story. If you own a home built before 1980, your real maintenance costs have shot up 76%. That is not cooling. That's a rocket launch.
So you might be asking, how do they get away with this? Well, here's how they cook the books. The official inflation number, the CPI, is supposed to measure your cost of living. But just look at what the Bureau of Labor Statistics just conveniently leaves out. Property taxes, up 47% since 2020? Nope, sorry, that's a capital expense. Doesn't count. Homeowners insurance premiums skyrocketing up to 70%? Nah, they only count what's inside your house. And the big one, major maintenance, the real wallet killer, also a capital expense. It's like they're saying you're not paying to live, you're just investing. Your bank account knows the difference, though.
And look, this isn't just a theory. This isn't us spitballing here. This is real financial pain. A full 42% of homeowners say their number one regret is getting completely blindsided by these exact costs that the government pretends don't even exist. The official data tells them one thing, but their wallet is screaming something else entirely.
And that's where we get to the big question, right? If the numbers on this single biggest asset for most families are this disconnected from reality, it forces you to ask, what other parts of this so-called booming economy are just a fancy simulation designed to keep you from panicking? Oh, they absolutely want your eyes locked on the AI boom. NVIDIA, OpenAI, it's the perfect story, a once-in-a-generation tech revolution. And hey, maybe it is, but it's also the perfect magic trick, the perfect distraction. Look over here at this shiny new thing, and please don't look at the actual gears of the real economy grinding to a halt.
Don't take my word for it. Just look at the data. For 35 of the last 37 months, let that sink in. The U.S. manufacturing sector has been in contraction. That's not a blip. That's not a slowdown. That is a long, grinding trend in exactly the wrong direction. We are making less stuff. Period.
And here's the kicker. All that stuff we are making, it's not selling. Warehouses are filling up with unsold inventory at a rate we haven't seen since, wait for it, 2007. Does that ring a bell? It should. It's a massive red flag that demand is just collapsing.
And this isn't just some abstract number on a chart. It has real-world consequences. Take Value City Furniture, a 75-year-old company, 120 stores, just gone, bankrupt. And what's their reason? They cite the very same tariffs that are supposed to be making America great again. The system is literally eating itself. So when the real economy breaks down, where does all that money go? It doesn't just disappear, it flows into the absurd. Welcome, my friends, to the political casino. You've got the DJT stock trading at over 1,200 times revenue. To put that in perspective, that is pure, uncut insanity. Then you have meme coins named after political figures that just collapse 97%. This is not investing. This is a degenerate economy, a symptom of a much deeper rot.
And that rot extends to the very information you're getting. You think you're arguing with a fellow patriot on social media? You might want to check the data. A huge slice of the highest engagement political accounts are actually run out of places like Nigeria, Eastern Europe, and South Asia. This isn't about ideology, man. It's a business model. It's rage farming for profit. They're just exploiting divisions for a few bucks.
But this grift, this con, it goes so much deeper than some bots in a basement. This isn't a bug in the code. It is a feature, hard-coded into the highest levels of the system itself.
Just look at this timeline. It's so blatant. Step 1, Binance gets convicted of massive money laundering, called a threat to national security.
Step 2, all of a sudden, Binance funnels a ton of cash into a Trump family crypto venture, sending its value into the billions. And then, Step 3, the guy who ran the whole money laundering operation gets a full presidential pardon. It's all right there, in the open.
And this is what happens when the rot sets in. This quote from a Department of Justice attorney, it says everything. Their job wasn't to find the truth anymore. It was to find evidence to fit a narrative that was already written for them. The very institution that's meant to uphold the law has been weaponized.
You see this systemic failure everywhere. Look at the U.S. Navy. They took a proven, off-the-shelf European warship that was 85% ready to go. Simple, right? But then comes the U.S. way of doing stuff. Endless modifications, endless tweaks, until the final ship was only 15% common with the original. And guess what? Costs exploded and schedules just vanished into thin air. It's the perfect metaphor for our entire bureaucracy.
And that's the big reveal, isn't it? This level of dysfunction, this constant chaos, it's not an accident. It's not incompetence. It's a feature. They need the noise, the division, the economic absurdity, because it provides the perfect cover for their next big move. Now, this is where the theory goes deep, deep down the rabbit hole. Some folks believe all this manufactured chaos is designed to usher in something they call the Great Reset. The idea is they create a crisis so bad that people will literally beg for a solution. And that solution? It'll come in the form of central bank digital currencies, CBDCs. That's programmable money. Money the state can control, can turn on and off. A system of total control. A digital gulag. Now again, that is the theory. We're not claiming its truth. We're just analyzing the probability. But if the official system really is this corrupted, if the fiat code is this buggy, are there any glitches that point to a potential hedge? A counterplay that exists outside their little controlled simulation.
Well, here's another glitch in the data that's really worth a closer look: the gold to silver ratio. For centuries, this ratio has followed certain patterns. Right now, it takes about 73 ounces of silver to buy 1 ounce of gold. That is way, way above the historical average. The data is practically screaming that silver is massively undervalued compared to its historical relationship with gold.
So the big question is, why? Well, let's look at the ape theory on this. Number one, there are rumors of a massive short squeeze building against big banks who are on the wrong side of the trade. Two, you have critical, non-negotiable industrial demand. You cannot build solar panels or EVs without silver, period. It's the world's best conductor. That demand is not going away. And three, the physical supply, well, it's getting squeezed tighter and tighter every single day.
And this quote right here illustrates the potential endgame for anyone who is shorting silver. What happens when the demand for physical delivery actually comes and all those paper contracts can't be settled? As one source put it quite simply, they can't deliver the metal because they don't have it.
We are watching this chart like a hawk. And while you wait for the next candle, go grab your free gear. Sign up for Public to get $20 in free assets, check Webull for that BTC promo, or grab your NVIDIA stock on Moomoo. All the links are in the description. Smash the like, subscribe to the tribe, apes together, strong.
The system is glitching. The fiat code is corrupt. So the final question is, have you backed up your wallet? Let me know what you think about this silver glitch down in the comments.